Hello, welcome back to yet another video. I hope everyone is doing well. This one again is a little bit of a travel video because we are in Mallorca, but also obviously trading included. Hopefully we get trade in. It is only Monday, still no trades as of yet, but I will do a breakdown for you guys tomorrow, quick one, or maybe later today, just like a quick from the laptop, not screen recorded. Maybe, I don't know, we'll see. But I will let you guys know what the pairs are for this upcoming week. And then hopefully we can start the 100 challenge account, the flip, 100 to 5k, get that going, and then we'll be on our way. But yeah, hope you guys enjoy. I'll give you guys a quick room tour. You can take it from there. Okay, so we can speed run this. You walk in, then you have like your extra little room with a little TV. Won't really use this. Keep going, then you have the bathroom, nothing crazy, just your regular bathroom. Then you have a super tiny cool kitchen with all your accessories that also I will not be using. And then obviously the main kind of room bit, as well as the balcony. Not gonna lie, this just gave me the biggest panic attack ever. I thought it was a spider, but I wasn't recording, so you couldn't get my reaction. But this is what we look like, what it looks like from the balcony. Nice beach view. But yeah, that's the quickest room tour ever. Nothing crazy. I don't really spend too much time in here anyways, but that will do it. That's nothing too crazy, but I won't really spend too much time in here anyways. So if anything crazy happens, I'll keep you posted. The markets did open up with some slight gaps, which obviously is not ideal, but it does happen, so we have to just see what we can do and how we can adapt. Starting on the daily time frame, we are looking to potentially look for those sales from that point. 4 hour time frame, all I'm going to be waiting for is a simple, obviously had the break, wait for a 4 hour. The next day, Tuesday, and all I'm going to say is I told you so. Every single thing, you know, we said it, it happened. It doesn't get simpler than this. Also, if you're part of the free Discord, free Telegram, this Euro USD trade is the same exact trade I shared last week, which is still very much so valid. So if you're constantly watching the markets, you know, you saw those ideas, it's still valid. You know, nothing really changed. Still break, retest, rejection, boom, selling, and then we're good to go. So hopefully you guys caught that. I caught that. One trade is all you really need. It's also nice because it's on a Tuesday and I can just enjoy the weather and enjoy my time now, because I'm probably not going to look at the markets anymore. But you know, if you still want to take 50 trades a day or take 4 or 5, that's okay. Like, you can. There's nothing saying you can't do that. But I just wanted to show you guys that you don't need to take that many trades. All you need is one good trade and then you're good. Now for the breakdown part of the video, to keep it super simple, basically the same as every other breakdown. Starting on the weekly time frame, this trade was slightly different just because we are very much so bullish on the weekly, and we know that the weekly time frame dictates the direction of price. However, because we are at a high point, not all-time highs or anything like that, but we are at a high point and have been hovering here for a good amount of time. Obviously these candles are all worth 1 week, so it is indeed a good amount of time. If we see the opportunity to sell, we can most certainly do that. So the weekly is bullish. Daily time frame, very much so bearish, because previously this was our high, then this is our higher low. All we did was shifted, creating a new lower low. This becomes our lower high, retest to then sell. Happened just like that. 4 hour time frame also last week was a little bit messy because we kept shifting bullish, bearish, and hovering in and around this zone, so we didn't really have any opportunities last week just because it was a little messy. However, this week all we needed, break, retest to then sell. Again, super simple, bearish as well. 1 hour time frame, all I was waiting for was also a break and retest. As you can see, it happened exactly here. If you do want extra confirmation, you can wait for another break retest here on the lower time frames, but we were all good there, catching a 2.55 risk to reward. But same thing as always, right? Just because ideally we do want all time frames in sync, but we don't have to if everything else looks good. But just remember, if we do get stopped out, the reason for it is because we are taking a counter trend trade. Okay, so always keep that in mind. And again, here we could have held way longer to like the bottom is almost a 1 to 8, but there's no need for that. Remember, you don't need to be catching all the moves, be greedy. I was happy with the profits, almost a 1 to 3, 2.5, so we're good there. But yeah, super simple. I'm not going to go into crazy amount of details just because it's the same as always. Like, the backbone is simply break, retest, sell. Okay, weekly time frame, we are bullish, so there is no real break retest here, if I'm honest, but the daily, very easy, break, retest, sell. Same on the 4-hour time frame, as the daily is having this push towards the area of interest. The 4-hour may shift structure, it may not, as you can see here it did a bunch of crazy stuff. So all we needed was the 4-hour to shift back bearish, have that pullback to then look for those sells. So super simple, super easy, don't need to overcomplicate anything, and remember, less is more. Also, one thing I will go through as well, since the breakdown was super speedy, what I'm looking for this week on Euro USD, right? So we are still very much so bullish. Price could easily just bounce from this area and have that push, or the daily time frame. All I'm waiting for right now is for price to have some sort of retest, right? So pull up slightly higher, retest, reject, to then sell. You don't need to focus on the 4-hour time frame that much at the moment until obviously price reaches this area of interest to see what we do, right? Ideally, what I would want to happen, what would really secure it, would be if the 4-hour created new high, this would be the higher low, break, retest to then sell. That would be ideal, but if not, obviously, I mean, we don't need that, but it's just extra confirmation. So overall, I'm just waiting for the daily to have a slightly higher push to then sell. If not, that's fine. I mean, the push can be anywhere in this area of interest, but it just needs to push up a little bit higher before I am ready to take the sells. But obviously other pairs as well that we are sharing with the students. So let's see what happens. I hope you guys enjoyed that quick little breakdown. However, I do want to mention something, because I've seen a lot of people talk about this, and I think some people are getting a little bit confused. A lot of people sometimes focus on pips and focus on the lot sizes instead of actually focusing on the bigger picture, which is risk management. And I want to show you guys quickly on the charts, because it can be confusing. I know, like, signal groups and everything use pips. So if you see someone saying, oh, you only caught a trade that's 30 pips, but your lot size was a lot bigger, it doesn't correlate. Let me show you real quick. Okay, I want you guys to look at this really quickly. These trades are the exact same. I know they don't look the same, and you're probably thinking, oh, this one is more pips, my take profit is way more pips, this one's only 54, when this one is way more, basically double. This one is 104. And you're thinking, well, I made more money with this one, and you made less money with this one. It's false. They are both a 1 to 2, 1 to 2, 1 to 2. The most important thing to remember is your stop loss, okay? A lot of people who focus and say, oh my gosh, you didn't catch as many pips, so why your lot size is so big? The reason why your lot size can be bigger, even though you've taken technically a smaller trade, i.e. smaller, less pips, is simply because of your stop loss. For example, I risk more or less the same amount per trade. So let's say we're risking 100. Let's say we're risking $100 per trade, right? We're risking 100 for this one, and we're risking 100 for this one. Because it's a 1 to 2, it means that you make double your risk, which is 200 here, and we make 200 here. In order for me to take this position, my stop loss is slightly bigger, right? So whatever the market's doing, I have a slightly larger stop loss, whatever, 4 hours higher, whatever it is causing you to have a higher stop loss, which means that your lot size is going to be a lot smaller than, for example, when you take this trade, just because you have less breathing room, which means if I still want to risk 100 on this trade, I have to up my lot size so I can actually reach the $100. Do you get what I'm saying? So for example, this one could be a lot size of like 0.5 because it's a lot bigger, but this one could be a lot size of 1. Okay, and even though this one is a bigger lot size and smaller pips, it's the same exact thing. We're still making 200 on this one or 200 on this one, but a lot of people are getting a little bit too carried away because they think, oh, you only caught 30 or 50 pips when your lot sizes were like 10. But I caught 100 and my lot size was 0.5. It doesn't matter. We're still making the same amount of money. Or just because you have more pips doesn't mean you've made more money. We could have 100 pips, but our stop loss could be giving us a 1-to-1 or a negative. You know what I mean? So please, if you can, stop focusing on the pips as much because they don't matter unless your risk to reward is positive and you've managed it accordingly. Because, you know, like I said here, you could either... Those two trades what I showed before were the exact same trade. We're risking the same amount, but it just takes more lot sizes to make up my 100 because I have a smaller stop loss. People who kind of count pips more often, obviously in signal groups, because they usually have a set amount of, like, their stop loss is a set amount, whereas my stop loss varies, right? But it's always at least a minimum of a 1 to 2 risk to reward, because otherwise it just doesn't make sense. So please, if you can, don't focus on pips because it doesn't have a correlation to your lot size. Just because someone has a larger lot size doesn't mean they're necessarily risking a lot. It just might mean they have a tighter stop loss compared to someone who takes a different trade with a larger stop loss and they have a lower lot size, but they could still be making the same amount of money. Same here, or even more pips does not indicate more money. Okay, so please don't get confused there, because I get it, it's easy to get confused, but I hope that clears things up a little bit. I hope that kind of makes sense. The most important thing to remember is risk reward. If it's negative, terrible. If it's positive, amazing. At least I personally look for a 1 to 2 always, because otherwise it doesn't make sense. So pips don't have a direct correlation to your lot size and the amount of money you make or whatever. It's just mostly about, I mean, they do have a correlation. What I'm trying to say is, most importantly, is risk to reward and risk management. So hope that helps. Thank you so much to each and every single one of you guys who tuned into this video. I know we have a little bit of chart time, but I just wanted to show a little bit of life as well. So hope you enjoyed. Make sure to like, comment and subscribe, and I'll be sure to catch you guys in the next one.